99% accurate Forex trading cheat sheet. Trading strategies part 2. Hello and welcome to Trading Strategies part 2. In this video, we'll be talking about an effective trading plan where we will derive the most efficient trading system. To fully understand it, you will need to understand the concepts that have already been explained in the first videos of the previous course. So if you have not yet done so, please go back and watch all the videos. So why do you need a checklist or a cheat sheet? A checklist is used to qualify why a given setup is valid. That is, you define the quality of setups that you are looking for. Here we are trying to remove randomness within your trading. A checklist is made after you have decided through research and development what your signature trade, secondary and tertiary are going to be. It gives you a roadmap to follow. It makes you trade professionally. The aim is to win as many trades as possible and also to maximize on those winning trades. Here it is to raise the odds so that we will not be in a 50% probability business. For this video, we are going to be discussing 2 entries and their checklist. We will be adding as we go, and we cannot actually compress all the entries only in one YouTube video. Trades that we will be talking about requires you to have some appreciation of levels. So if you have not yet done so, visit our Market Maker Method part 2 so that you will fully understand. We are going to be talking about the safety trade as well as the 22 trade. The safety trade. This is the most safest trade that presents at the second level initiation, usually occurs at the 200 EMA. This trade only calls for 50 pips on the take profit and 25 pips on the stop loss, and can be clearly seen only on the M15 time frame. Here is the illustration of what we are trying to do. From my left, where my cursor is moving, we assume that we already have 3 levels of rise up to the peak of the chart. From the peak of the chart, we had 50 200 cross. Remember, this is the M15 time frame. We had a 50 200 cross. Then after 50 200 cross, here we had a pullback of price up to the 200 EMA. After price pulled back to this region, it presented an M, giving us an opportunity to enter after candle closure below the 13 EMA. After entry, that is where we are saying your stop loss should be 25 pips above this entry point and 50 pips towards the target. This M is qualified by divergence on the TDI, where we would see the first leg bigger than the second leg, but on the price, it is actually inverse. Here is the safety trade checklist. These are the questions you should answer in order to validate and hit your 50 pips, probably every day. Number 1, did the peak lock? Did the 50 200 EMA cross? Is the TDI showing divergence? For shorts, that is selling, did the price form an M with a nameable second leg? For longs, did price form a W with a nameable second leg? If you answer all these questions accordingly, and take your trade. That trade is definitely 95 to 99% accurate. It will come that no one is 100% in this business. So we'll leave that 1% that there are some other forces that are beyond our control as traders to take your trade to loss. Then the 22 trade. The 22 trade is taken at the peak. This occurs mostly after every 3 levels of rise or drop. The first thing to do here is counting the 3 levels. Here's the illustration of the 22 trade M pattern. In this scenario, I assume that on my left, where my cursor is moving, there are already 3 levels going up. After having those 3 levels, we had the first leg setting that day's high. Then price came back to that yesterday's high, but couldn't take it off. Within that region, the price actually gave us an M with a nameable second leg in the US session. This trade is a pristine trade that whenever it presents, trade without fear. This is the 22 trade illustration for the W pattern. And as you can see, the prior day gave us a level which we failed to take off in the previous day. And on that previous day, we had a W with a nameable second leg. And our entry was going to be above the candle closure on the EMA 13 period. So here's the checklist for that trade. Is the first leg in the prior day? Did price come to challenge the yesterday's high or yesterday's low? Did the price form an M or a W with a nameable second leg with at least one of the most common candlestick reversal patterns? And did the TDI show the M or W with divergence? If you answer all these questions accordingly, then trade without fear, and that trade will also fall in the 95 to 99% accuracy region. So in conclusion, these are some of the best entries that you can raise your odds with. So go back to the charts and do some back testing. You really need to put in the hours. I repeat this again, you really need to put in the hours, because you will only be good at this if you see these things in hindsight. Remember not to confine yourself to pairs that are difficult to see what is taking place. So thank you for watching. Please share this video with someone. It will definitely help you. Do not forget to check out our free Signals Telegram channel, and this is the URL. Also check out all the videos that I've already posted on this channel. It will definitely help you if you have not yet done so. Let's meet on the next video.